Yes, good afternoon, guys. Here is this week's edition of our forecast for the upcoming week. The weekly mentorship, the upcoming weekly mentorship is going to be in two parts. What I'll be doing this week is I'm going to firstly discuss the dollar, and I'm going to highlight potential areas that we are going to be looking out for in the coming week. And as you all know that the dollar determines mostly how we trade the currency pairs, the commodities that are in our portfolio. So we're going to discuss the dollar first, and then in the second part of the webinar I'm going to talk about 3 or 4 pairs which we'll be looking to trade, and I'm going to highlight the potential areas that we're going to look to trade from based on what the dollar is doing. So let's get started. As you can see, the dollar has been bearish from 97 supply zone. I highlighted this supply zone 3 or 4 weeks ago towards the FOMC, when I clearly mentioned that dollar is hitting a very strong supply zone prior to FOMC. And yes, what happened after is quite revealing. So now, when we trade supply and demand, institutional supply and demand, firstly, you have to be in a position to highlight which supply or which demand is in control of the market, or the asset, or the currency pair, or the index, or the commodity. So you have to be in a position to highlight that. That's one of the most important things that you have to do. If you get that part wrong, then your analysis won't work out quite well. So now when we look at dollar, right, the dollar index determines how we trade most of our pairs in the portfolio. So when we look at the dollar, we can clearly see that the 97 supply zone is in control of the market. Now, how do we know that, right? When we read the market structure of dollar, right? When we read the market structure, price hit the 97 supply area and made strong impulsive moves to the downside. Right? We had a strong impulsive move here. Market retraced, another supply area created, then another strong impulsive move to the downside. So that in essence tells you that this supply area here is in control of this market, right? So now, once you have highlighted, or once you have recognized that, okay, from a higher time frame point of view, supply zone is in control of the market. Once you have highlighted that, then clearly there is no way you are going to be looking for longs when it comes to the dollar. So you'll be looking to the downside. Yes, of course, most people will say, oh, but Ivan, we missed this, right? We missed this up move, right? We missed these up moves. But look how those up moves were easily erased with impulsive move to the downside. So it would have been risky. You see, this bearish candle here was erased instantly. We had close to a week, market was moving all the way to the upside, right? But it was instantly erased out all those gains were erased by just 3 days. You see, on 3 days erased out all those gains. So that's how you have to look at the market. Look for the favorable bias on whatever asset that you are trading. Look for the favorable bias of that asset. So right now we are looking at dollar. It hit this supply area here, 96.90, which was created here. See, there was a pause in the market here. Supply area was created, market tumbled, then it retraced to the same supply area, market tumbled, right? So those impulsive moves are very important. So now, last week, prior to Powell's testifying to the Congress ahead of the June FOMC meeting, market tumbled to the downside. So you can clearly see we had a drop, then we had this pause here, then we had a drop. So this is basically a drop, base, and drop. You see, for those that are not in our mentorship group, those that haven't enrolled in our course, you wouldn't understand this, but my students will definitely understand what I mean by drop, base, drop. So now, what are we looking at when it comes to the dollar? Right, last week closed quite strong bearish on a daily time frame. Now, if I'm going to go to a weekly chart, you can clearly see now what I mean by, okay, strong supply is in control of the market. You can clearly see here. There's our supply area from a weekly time frame. We had a drop, base, drop, market corrected back. Then I'm still expecting price to drop to this 95 area. I'm still expecting dollar weakness in other words. So then how are we going to be trading that? Okay, let me go back to the daily chart. Now, when we look at the daily chart, you can clearly see we have this supply zone here. We've got this supply zone in control of the market. And now look where market closed last week. A strong area of demand on a daily time frame. Rally, base, rally. So now what we have to do is to be patient with the market. We need to see how Monday and Tuesday's trading is gonna go. The moment we take out these lows, then our target is all the way to the 95 demand area. And it won't surprise me that dollar weakness is gonna continue in the coming week. That won't be a surprise. I won't be surprised to see a strong bearish taking out all this in an instance on our way to the downside, right? But if it happens that market's price does not close below this zone here, either Monday or Tuesday, then you could expect a small correction to this area here before we tumble to the downside. So basically the market is bearish on a daily time frame on dollar. The market is bearish on a weekly time frame. So shorts are advisable if you are in a position to trade dollar index. I know most people do not have the equity to open position on dollar index, but this does not mean you can't benefit from the market, as we are going to see on the the following webinar, where I'll be talking of the currency pairs that we are going to trade based on this analysis which I've just done. So higher time frame bias, we are looking at dollar to test the 95,600 demand area. That's our higher time frame bias. So we're looking for shorts on dollar to the downside.
6:00 p.m.
We are looking for markets to test the 95 demand area. Okay guys, so that's much about it when it comes to the dollar index. Yes, price could retrace back, but at the moment I don't see that happening. I see more weaknesses in the dollar as we head towards the July FOMC meeting. I see more weakness coming into the dollar, and that will open opportunities for us on some of our portfolio assets like gold, EURUSD, NZUSD, you see. So we are going to get more opportunities from those assets. So that's much about it when it comes to the dollar index. And remember guys, for those that haven't subscribed to my channel, that's one thing you must do. Just subscribe with the button below to get updates, and make sure the bell icon is ticked so that each time I upload a video, you are in a position to get it instantly in your inbox. Because some people, they are missing the weekly analysis. They're only telling me that, oh, I only watched it on Wednesday, and by that time most of the zones would have been hit and you then miss a trade. We wouldn't want that to happen. So just subscribe with the button below, show some appreciation, comment on the video, share with your friends, and then we can move forward. Thank you, and happy trading in the coming week. Welcome back guys. Now this is the second part of our upcoming weekly webinar. Now I'm going to highlight 3 assets from our portfolio that we are going to be monitoring this week. It's in these 3 assets that we are going to look for opportunities to trade, and this is going to be based on what I've just said regarding the dollar in the previous webinar. So now, with us highlighting that dollar has a potential to be moving to the downside, we are going to look at how that is going to affect fiber, which is EURUSD. How is it going to affect the precious metal, which is gold, and the Japanese yen, dollar against the Japanese yen. So you need to be in a position to follow up on those 3 assets that I've highlighted. I'm going to be highlighting the zones that we are looking to trade from. So firstly, let's look at EURUSD. Right, as you can see with the EURUSD, price has been meandering to the downside. Price has been meandering all the way to the downside. There's not much price action on a weekly time frame happening there. So now we have price is in a strong area of demand. See, this level here is holding when it comes to fiber. So now, since we highlighted that dollar is bearish, this basically supports our analysis if you're bearish on dollar index, you look to long, to go long on Euro USD. The euro has to gain a bit of momentum if dollar is bearish. But of late, the euro has been under immense pressure. So that's why we have got this funny price actioning happening here on a weekly chart for euro. So now that we have highlighted that no, we are in a strong demand area, let me go to daily chart. Right, from now we can clearly see our demand area holding up nicely from a daily time frame, and same principle applies that I highlighted previously. You have to read the structure and see where the market is making the strongest impulsive moves. As it is on dollar, we hit a strong demand area. Now we've got strong impulsive moves to the upside. One impulsive move, price retraced. Second impulsive move, price retraced back into the demand zone. So now we took off from the $12 demand area. This level here managed to hold, and price has taken off. Where is it took off to this short-term supply area that was created. Remember, dollar index is also at a very critical area. I wouldn't say it a critical area. Dollar is in a no man's land at the moment. Let me switch back to the dollar, and then you can see what I mean by no man's land area. You can clearly see here dollar is in an area where you really don't want to take much action. So now the same is gonna apply on Euro USD. There's levels that you have to wait for. There's levels that you have to wait for price to clear up that level. So now in terms of Euro USD, that level is this area here. For aggressive traders, some will try to short the market, but now that's against our rules here. We've highlighted dollar is bearish, so there's no way we have to go bearish on Euro USD. That's too risky for us. So now what are we looking for? I'm expecting price to push through this area here. I'm expecting euro to gain a bit of momentum. I'm expecting price to push through. So now our positions now are being determined by how price is going to react to these highs. You see, these highs will determine what type of trades are we going to be looking at. So I'm definitely going to be highlighting this in real time in the coming week, but as of now we're looking for price to shoot back up to the $13,600 supply area. I'm expecting Euro USD to shoot up to that level. This in turn is being helped by weakness in dollar index. The more we get weaknesses signs on dollar index, the more we look to go long on Euro USD. If it happens that we get pullbacks, the $12,100 area is a potential area for us to long the market, potential area for us to go bullish in the market. So take note, whenever I highlight an area, especially on a daily time frame, you as a trader, you have to drop down to a lower time frame, especially when price is testing that zone. You go to a lower time frame to look for your entries. For instance, in this case, let me highlight that guy, right? Now let me drop down to say 1 hour, right? You see, look at 1 hour, right? Once you dive down to a 1 hour area, this is the supply area that I highlighted, the short-term supply area, to say if market does go up there, then we look to, you either look for short. But for now, you see, market has to push through. You see, market is gonna push through. Let me go to a H4 chart. You see, you can clearly see where price is. If we do manage to clear up these highs on H4, if we get strong price moves to the upside and clear up this area here, then we're going all the way to $13. You see, and long term we'll be heading all the way to $14. This is supported by the fact that we're expecting more weakness in the dollar. See, strong impulsive move to the upside, we range, strong impulsive move to the upside, retrace. I'm expecting another strong push to the upside. You see, so that's much about it when it comes to the dollar. So now we are going to look at gold. Now this is weekly on gold, right? As we all know, gold is a safe haven currency or commodity for most traders. When dollar gets weak, more equities starts to flow into gold, thereby pushing the price higher. Now this is weekly gold. Let me go to a monthly. This is monthly gold. Market had a strong push. Remember, dollar is getting weak. The dollar is weak at the moment, one of the weakest pairs out there, currencies out there. So now look what's happening with the dollar. Market is pushing all the way to the upside, and look at the levels that we just cleared, levels that haven't been seen since 2013. You see, we have cleared up those levels, right? That's on a monthly chart. We have cleared up those levels. Now if I go to a weekly chart, let me zoom out so that you can see nicely. You can clearly see momentum is pushing to the upside on a weekly chart. Our weekly order flow is bullish. Our weekly order flow is bullish. So we had a rally, base, rally. Now, since our weekly order flow is bullish, which is also being supported by dollar weakness, let me go to a daily time frame. I did highlight this area as potential long area where you look to go long. In last week's webinar, I did highlight that we should look to go long around the 1380 zone. For those that watched the webinar, you know exactly what I'm talking about. Now this week, I'm expecting price to clear up these two highs. So long trades are ideal on gold, but yes, market can retrace a bit. This type of price action here can catch a lot of traders out. There's a lot of traps in that type of price action, so you really need to be careful when you're trading gold. Take note of 1380 price area, take note of 1438 price zone. You can clearly see this is a very choppy market at the moment, right? That's on a daily time frame. Let me go to H4 time frame, and then you can see exactly what I'm talking about. There we go. So now on an H4, you can clearly see my 1380 short-term demand area, which I highlighted for people to go long. Yes, we did go long there. That was one of our trades from last week. So now where price is currently, if it happens that we have a push to the downside, then the 1380 price level is a potential bullish entry. That's where we look for, or for bullish trades from that level. But if price does close below, then we should consider our analysis and look at what dollar will be doing at the moment. But the coming week, my main focus, we are still strong bullish on gold. I expect price to either test these highs or even clear above all the way to the upside for the bullish momentum to continue. I really foresee that happening. As you can see from H4 chart, bullish momentum is in control. Then we rally. So now I'm expecting the same thing to happen here. Then we rally to the upside. So you can clearly see that whatever the dollar is going to be doing, the more we get bearish evidence in the dollar, when it comes to gold and EURUSD, we are going to be going long. Right, so now let's look at the third and final asset in this week's weekly forecast, and that's gonna be USDJPY. This is a no-brainer. As I always say in the group, always aim to see how the Japanese yen is gonna open tonight, or some they can say morning, since the yen opens first before gold. So you have to take note how the yen is gonna open its price. But from a weekly perspective, when is bearish, the Japanese yen is bearish, which is to be expected, right? USDJPY is bearish, but we have had instances where price rallies, but massive impulsive moves are to the downside, right? Massive impulsive moves are to the downside. Now you can clearly see here, last week we cleared up this high here. Obviously there was liquidity there, and then price shoot down, right? So now I'm expecting the yen to continue with its downtrend. It has to test the 106,800 price area in the coming week, or be that it is May, in the following week. So bearish evidence are quite strong on USDJPY. Let me dive down to a daily time frame, then you can clearly see. There we go. Now on a daily time frame, you can see that strong impulsive moves are to the downside. Strong impulsive moves are to the downside. So I'm really expecting price to clear up 107 and test 106,800. I'm really expecting price to behave in that way in the coming week. So short positions are ideal on USDJPY, but from which price area now, right? For aggressive traders, you're going to be going into the market as soon as market opens, which I don't recommend. Monday, we don't trade Monday. We have to see what the market is doing before we make any decisions. So now market has got the potential to retest 108 short-term supply zone. Remember, in a bearish market, in a strong bearish market, new levels of supply are created. There we go. That's one. That's one. That's a level of supply, level of supply. And then we had another one that was created here. So if market does retrace up back to the 108 800, 108 600 price zone, that's a good potential area for you to short the market. That is to go to the downside. So it's a no-brainer when you're trading gold and USDJPY. If you are long on gold, it's a no-brainer. You can't be long on USDJPY. You see, you have to be short. You have to go to the downside. So now let me go to a H4 chart, and then you can clearly see. Right, there is the 108,800 area that I've been mentioning. This is a good potential area to short the market to the downside. 109 area, a good area to short the market to the downside. 110 area, a good area to short the market to the downside. So you see this is all supported with what the dollar is going to be doing, how the dollar is going to behave in the coming week. So I'm really expecting dollar to continue with its bullish bearish move to the downside all the way to 95. So when that is happening, we are going to be looking for short trades on USDJPY. Take note, 108,800, 109,600 price zones. We are going to be long, to look for long positions on gold from 1380, 1385 price zones. And then we are also going to be long on EURUSD from the $1.12 price area. Is a much better potential area for you to look for longs. But if price does clear up $12.80, 85, then that's another potential area for you to long the market. I hope you all understood what I've put out for you in this week's webinar. Of course, we are going to get more opportunities on NZUSD, AUDUSD, but that's for you as a trader, since I've put out the template there for you to trade all these other pairs. USD CAD, they'll be offering great opportunities. USD CHF all the way to the downside to the 97,500 area. So that's your homework as a trader. So our mainly assets are going to be USD CHF, USDJPY, sorry, gold, and EURUSD. I've highlighted the zones for you there. Mentorship group, you are also going to receive the webinar notes of what we've been discussing here. And I wish you a happy trading week, guys. And remember to be patient with the market. You must be patient with the market. Don't rush to go into trades on a Monday when there's low liquidity. You get taken out, you get stopped out before the market continues in your predetermined direction, and then you'll be crying. So be patient with the market, guys. And for those who have not joined my mentorship group, it's the right time for you to join. You can just contact me with the details, which will be shown on the screen in a moment. And also try to subscribe, hit the button below, subscribe to the channel to get updates every time I upload a video. And also make sure the bell icon is clicked so that you get notifications every time I upload a video. So that's pretty much about it for the upcoming week. I expect you guys to get quite a few pips from those setups like we did last week. Last week was a very good week in our mentorship group. We did quite well, and it's all about patience, guys. You must be patient with the market. Happy trading, everyone, and have a great week. Thank you.